Hey everyone, this is Rob Keynes of goldsilverpros.com. It's Thursday, September 3rd, 2020. And I'm not liking what I'm seeing in the data for gold and silver. And I think something funny is going on. We're going to get into that in the video. Then we're going to look at LBMA gold over in London, as I promised we would earlier in the week, and talk about why there's not a whole lot of free gold or gold float available in London, as they would have you believe. And we're also going to talk about the scheme where they're trying to use the supposed inventories in London to back up the COMEX. All of that and more today. So let's go ahead and get started with the data. So I'm seeing the gold and silver price continue to fall, and it's a little interesting because we saw on Tuesday's video that there were some fairly healthy gold and silver deliveries the first couple of days for this contract month on the COMEX, and yet the price continues to fall even though additional deliveries are coming in, and that really doesn't make a whole lot of sense. So let's go to the metal issues report, and we're going to look here. We're going to start with COMEX gold futures. As you can see here in this part of the table, the first delivery intent date for September came in at 1,928 contracts of 100-ounce gold, and we've had, a steady diet of them. 891 came in yesterday, so that's a fair amount of people demanding gold on the COMEX, given that there's really low open interest at this point. So that's a little puzzling. Why is the gold price not going up? Typically, when you have deliveries, it'll go up. Now, sometimes there's a little bit of a delay. But in fact, the first delivery notice date, we did see a pop. And then even though we came in 891 here yesterday's data, it's continued to fall. We've had 2 consecutive days of falling gold price, even though 891 contracts is a fair number. So I'm looking at the volume, and the volume has ticked up. And what that tells me, it's probably just some additional shorting. So it's the paper market kind of overtaking the physical. Now, to be fair, that many gold contracts is not an unheard of number. It's not a really huge number, but it's a fair amount. And in July, when we saw a fair amount of deliveries notices come in for the actual physical on both gold and silver, we saw really nice price pops. And we have about half of that so far in both gold and silver, and we're not seeing the same price pop. So that tells me that there's a lot of paper activity going on, and the market aren't responding like they typically do when a lot of gold and silver comes in. So it could be news, because there's been a lot of news lately around the election. Has been a lot of news around the stock market. People are putting money in the stock market. So I showed you on Tuesday into the ETFs and stuff. So money may be flowing out of gold, and there's a lot of paper shorting there. From a paper perspective, but usually when we see silver deliver, we see a nice price pop, and we're not seeing it either gold or silver. Let's look at silver real quick. Silver popped on the first delivery date notice at the end of August here for silver, because there were quite a few contracts posted for delivery, and then it's come straight down. But if we look at silver here on the metals exchange report, or I'm sorry, delivery notice report, it popped on 6,500 contracts. Now, 6,500 contracts is quite a bit of metal. Let's actually do this on the calculator real quick. So this is 5,000 ounce silver. We'll do 6545 times 5,000 ounce, and we get a healthy 32 million ounces. We saw about 70 or so, even a little bit more than that, 70 million ounces delivered in July, and we saw the price go up from 19 to, what was it, almost 29. It challenged 30 bucks. So a little over double the amount of silver, and we saw a very healthy pop of about $10 in the price of silver. We've seen just slightly less than that come in here in September, and the price really hasn't gone anywhere. It's trading exactly where it was when the deliveries came in. Yeah, that doesn't make a lot of sense. Now, it could be a delay. We could see in a couple of days silver pop up again. It would not surprise me if silver pops up again, and we see the price challenge the $30 mark. I didn't think that was going to happen, because a lot of the open interest had vacated silver. So we look here, not a lot of open interest for September. Most of it's moved to December. Of course, September's not the active contract anymore, but a lot of that interest had rolled over to the active December contract, as we got closer to September. So I didn't expect a lot of deliveries, but we've actually had a healthy amount of deliveries as a percentage of overall interest in both silver and gold, and it's not affecting the price. That seems a wee bit fishy to me. So again, people are coming in, maybe using paper to short it, but the silver and gold should go up. So I would expect to see both of them go up in the next few days, but that seems, it just seems a little bit fishy. Something else very interesting going on in gold is it appears that people are coming into gold and literally trying to get gold the same day with gold contracts. So I'm going to show you something. August 28th was the last day to roll over a contract from September to December in gold, meaning if you didn't want to deliver on September contract or do cash settlement either way, then you would roll over to December. And so the last day we said we saw a total of 3,070 contracts would stick in September, where it's either delivery or maybe cash settlement or whatever the case would be, but it wouldn't roll to December. So keep that in mind, 3,070. If we go to the issues report for gold, we've had 3,124 delivered contracts. So that 3,124 delivered contracts is more than the actual open interest for that September contract. So what's happening there? We have an extra 54 contracts that people have apparently gotten delivery on that weren't in the open interest. So are they posting, a contract to get immediate delivery above and beyond what was there at the beginning of the month? That question needs to be answered. How does this work? If you've only got 3,070 contracts, but you've already delivered 3,124 gold, and the number is going to continue to rise as we go through the month, it may end up at 4,000 or more than that. How can you do that when you only had this much open interest left for the September contract? What kind of contracts being posted? If September's not actively trading anymore, and it's December is the active contract, how does that work? Again, behind the scenes, something fishy is going on in gold. We're going to watch that. And I'm starting to see other fishy stuff in this data as well. And I'm working with somebody who studies this very intently, and hopefully we'll have something out on that. We're doing a collaborative effort, or we're going to talk about other goofy stuff going on in open interest. But it appears that there's more gold being delivered than you would expect based upon the open interest, but yet it's not affecting the gold price like it normally does. That's really fishy. That means that these gold deliveries are going on sort of under the table, and that's why the market's not responding to them as you would expect. That's the only thing I can think of, because when this data comes out and you've got this amount of healthy deliveries in both gold and silver, you expect to get a better price pop, and that's been the history, because physical delivery really does affect price movements. And especially when you have a relatively modest amount of open interest like we see in the September contract. So again, I think there's some under the table stuff going on with physical delivery on the COMEX that's not showing up in open interest, which means the data we're getting here right now is false, especially in gold. And now it's not the same in silver. We haven't eclipsed the amount of silver open interest with the amount of delivered contracts, but it happened in gold. So I have questioned this data before. And I think given those two things, more deliveries than there was available open interest for gold for September, and the fact that the prices are not reacting to very healthy delivery reports in both gold and silver means that this market is officially broken. I think the COMEX market is broken. Is it out of the metal? Based on the way people come in at the beginning of the month and try to grab their metal, and based upon the way people come in and actually redeem more contracts for delivery than are actually on the COMEX, that tells me people are getting metal off the COMEX that's not on the up and up. It's not in the public data. That's a sign that they've run out of gold, and they probably run out of gold, and there's some backdoor dealing going on there because the data is just not as trustworthy at this point. Does that mean we're about to have the COMEX quote unquote default or declare force majeure because they don't have the gold? I don't know. Now, if we look at some of the reports on the COMEX around, if we look at data on the COMEX around the amount of gold and silver we had available for delivery, I showed you a few weeks ago, there wasn't much left on COMEX, and there's not much in England as well. So what I'm going to do is I'm going to kind of show you those statistics real quick. Now, my video conferencing software is being extremely annoying at this point. So I'm just going to kind of minimize my screen a little bit here as I show it to you. One other thing before we get into how much gold may be available in the LBMA, I wanted to talk about the release schedule for the COTS data. I said on Tuesday we would have the COTS data for the first couple of days of September, and they may give us a direction on how much shorting is going on. Here's the COTS posting schedule. There's supposed to be an update on the 28th, but the only COTS report we get is here on the 25th. And this is the same one I went over Tuesday. And the next one's not scheduled for the 4th. So this is the calendar of reporting the COTS data, and it's not accurate because we got one on the 25th, not the 28th. And you know, the 4th is tomorrow. Will we get the one on the 4th? I don't know. But they're saying as of August 25th, yeah, I don't know what's going on. It's a little disconcerting that the CFTC, the regulator, says they're going to release data on certain dates and it doesn't come out. So I apologize. I can't tell you who's going long and who's going short for the September positions because it's not available. So we're just going to have to wait till that report comes out and to see the changes. But what we can tell from the price is, one, this data is not correct because we caught the data not being correct. There's another way it's not correct, which I'm not going to point out now. I'll point out after I do some additional research. But when I show you're going to look at these data tables and say, yeah, these are all basically bullshit. And we caught one. We caught how they're delivering more contracts than you have open interest. But there's another way it's bullshit, and we'll show you that. So anyway, a lot of goofy stuff going on in the COMEX. I'm going to continue to follow the market, and where I see data anomalies, I'm going to let you know. But just know that I suspect that they're running out of the gold and silver, and that's why the data is not heading up exactly, and that's why it looks like there's some under the table stuff going on. Anyway, I've beaten that horse long enough. We're going to go over to LBMA. LBMA is the oldest gold market, that it's not transparent. As I stated before, if you want the detailed data like we get on the COMEX, these nice charts that we see on the COMEX, you have to pay $18,000 a year. So obviously that market is meant more for big players, market makers, things like that, big companies, central banks and so on, whoever wants to deal in that market to get the gold or to take a gold position. So I can't show you all the data on the LBMA, but here at Nick Laird's site, he does have a little chart that shows LBMA London Gold Holdings. And this green is what you want to pay attention to. This is the free gold or the estimated float or the available stocks. All the rest of it, the blue is London ETF holdings. Most of that is a GLD because a GLD is held in London. It's not held on the COMEX. And the other is Bank of Reserve holdings that they hold for themselves and for other people within the Bank of England. So this green is how much they have. Now, historically, this is a fair amount, but I actually think this number may not be accurate. A gold storage number is not accurate on one of these major exchanges. I know, shocking, right? But in any case, they say they have maybe about 700 tons available here based on Nick Laird's chart. Previous analysis done in 2016 said they may only have up to 1,000. So it appears as though they're not very liquid overall. There's not a whole lot of liquidity in London. And I'll explain in a moment why that's important. So this is the current data. Now, there was a study done by Nick and some other people back in 2016 where they actually broke all of this down in the LBMA. And they showed that there was, in the Bank of England vaults here on this part of the chart, this left third, there was unaccounted for 946 tons, meaning that's the float from the Bank of England vaults. The rest of it was accounted for. It was central bank holdings and all this other stuff. They were able to account for all but 946 tons. So that 946 tons could still be in the Bank of England vault. It could be leased out. It could have been sold, but they think it's possible there's 946 unaccounted for in the Bank of England vaults. Now, the privately vaulted gold, they think is only 96 tons because they went down here and looked at all these ETFs and other things. And they said, okay, all of this, is accounted for. We know how much they have. So if you look at the rest, it's only 96 tons. So you get a total of about 1,042 tons right down here of available floating gold in London, potentially. It could be anywhere from 96 to 1,042 in 2016. And as we can see, that hasn't changed much. It looks like maybe only 700 or so is available, maybe 800 is available right now. So the publicly available data that we're able to get here, plus this in-depth analysis of looking at all these different owners of gold in London and who owns what, leads us to believe there isn't a whole lot of tonnage left. Why is that important? Well, that's important because there is a scheme basically to back up, it's right here, sorry, got to get on the right tab. So Reuters reported this back in March. It was reported in a lot of outlets. The CME pushed to change the gold delivery rules so that they're blaming it on the economic shutdown. in the travel situation, not be able to fly. Of course, commercial flights were still going. You could still transport gold, but they were saying we can't transport gold between London and COMEX for people who are using the two to hedge. And so therefore it caused this inventory issue, and we're having inventory issues with the miners. So they were going to use London gold to back COMEX. And the way this works is London gold is 400 ounce good delivery bars. The COMEX is 100 ounce. So if you look at COMEX, it's 100 ounce gold future contract. And in London, it's 400 ounce. So they said, we're going to create this scheme called the ACE. And what the ACE is, it's a paper claim on a 400 ounce bar. So if you're trading one 100 ounce bar on COMEX, you can have a claim of 1/4 of a gold good delivery bar. Supposedly one of these in the free floating category, which isn't that much. So in other words, if there were a lot of delivery to come in on COMEX, this, I'm not sure if all this gold exists, but it wouldn't take too long, to drain that out if you consider all the other markets as well. In any case, they've got is like a fractional reserve gold system between LBMA and COMEX, and so far only 24 or 30 of these ACEs have been delivered from LBMA to COMEX. So the LBMA is not right now supplying a lot of gold to the COMEX through this contract. But it's interesting, the 1 month, I think last month in August, there were 24 of these delivered, and it's a multiple of 4. So somebody wanted, the 6 400 ounce gold bars. The 24 100 ounce is basically equivalent to 6 400 ounce. So nobody's going to take a fractional gold off of the LBMA. But in any case, it's not expected the LBMA actually has a lot of available gold. Now, if you talk to a lot of people actually watching the flow of gold from London to Shanghai and to COMEX and around the world, they don't think that there's this much free gold in London anyway. They think a lot of it's already been leased out to Asia for certain purposes or sold into the Asian market. The problem is we don't really know how much free gold is available in the world. If you look at the COMEX, and I've showed this chart before, most of the gold's sitting ineligible, and I'm not sure I believe the registered numbers because, again, we've got goofy stuff going on with delivery numbers here. We're delivering more than actual open interest. So I don't trust the COMEX numbers, but in any case, there's not a whole lot of COMEX gold available as a percentage of open interest. Let's see if we can get that open interest chart. It's not here, but you can see the eligible gold stockpile. Right here is not very much. And then you look at the LBMA, we don't think it's very much either. There's two other markets. There's a TOCOM, which is Japan, and there's a Shanghai, which is China. TOCOM, this black line here is the available gold, and the gold stocks are way down. The silver stocks are also way down as well. You can almost get no silver out of the Japanese market and very little gold. So in Asia, there's not a lot of gold, at least in Japan. Now, the problem with Shanghai markets, when you go to their data, they provide a monthly and annual report, but in the annual report, they only do trading volumes. They don't show holdings. So they don't show, eligible versus registered like we get on COMEX. So a lot of these other markets are very opaque. So we don't know how much is available in Shanghai. But what I've heard from every single market trader that deals on the Shanghai market is gold tends to go in that market. It does not tend to come out. The people there keep it. So whatever data is flowing from London or the US or Japanese market into China, it tends to get captured and stay there. But just looking at these different markets, there doesn't appear to be a lot of gold available. Now they're saying that, we could have up to maybe 1,000 tons between COMEX and LBMA, but I don't believe it. I don't believe it because we have all this mysterious data starting to pop out. There's something else that I'm going to show you next time I talk to you about another goofy statistic in which I don't trust this data. In any case, this video was just to say that the logic behind the physical deliveries versus the price has broken in both gold and silver. We should have seen bigger pops in both gold and silver. And I think that has to do with some of the under the table trading and also the increase in volume, the short volume in both silver and gold. Let's see if we can go to silver futures here. On a thinly traded month, that's really suspicious. On a thinly traded month in September contract in gold and silver, to have a high percentage of deliveries. Because if you look at July had a lot more open interest, and about half of the gold and silver was traded. In September, we don't have a lot of open interest, and half the gold is traded, but it's not popping the price. That something's wrong there. So, at the end of the day, I don't think there's a lot of gold available. I think there's a lot less than most people are reporting. I think the estimates for the LBMA and COMEX are very generous for available gold stocks. And a lot of this data is starting to become very suspect. We'll continue to build the case that this data is basically bullshit as we go along. But in any case, I think the big takeaway from this is that essentially you want to go get your gold. Okay, just if you're interested in gold and silver, if you're not, don't listen to me. I'm not your financial advisor, but if you're interested in gold and silver, you better go get it. I don't think it's there. And when we get to December and we have this massive open interest, unless people roll it to the next month, January or March or May, something's going to break in December. Literally something's going to break. Are we going to see more goofy numbers in gold and silver where we have more deliveries than actual open interest? Or what are they hiding? Are they going to try, remember they increased the amount of approved metal providers by 267 for gold and silver, trying to scrape the market outside of the COMEX. Then you've got the LBMA where they're trying to use LBMA gold to back up the COMEX. I think the COMEX is out of gold. You just add up all these different things, this goofy data, which makes no sense. The chart's not popping like they should, meaning they're not, the data around the short paper and the physical is disconnected. You can see that in two ways. The fact that they're trying to backstop the COMEX gold LBMA in a fractional paper system called an ACE, and the fact that most people aren't taking delivery of that, even though they say it's available, which probably means there's not a lot of gold in London, because more people probably would have taken, 400 ounce bar if it was actually there. All this is pointing to the fact that these numbers are starting to look like BS, and that we can't trust them, and that the run on gold silver may have already occurred for the big stockpiles, and there may be just scraps left. And I think the COMEX, using those additional approved depositing institutions, are trying to scrape the barrel and get whatever bars they can, those 267 additional approved depositors. The data is just screaming, there's been a run. I don't know if there's much left. And funky stuff is starting to go on with September. Funky stuff with deliveries versus the open interest, the paper market. Somebody's lying. It's in the data. I'm going to bring you another data point next time I see you on Tuesday, and you're going to look at it and say, holy shit, the data's really screwed up. So we'll continue to do these market reports, and I'm going to do these data reports because the value is in the fact and figuring out where they're lying. And they are lying. Where are they lying? We're going to figure that out. But I'm getting this, my sixth sense is telling me, if you want your gold, get it now. I'm about to make my last vaulted gold purchase here this week. I'm just waiting for the funds to clear out of my bank. And it's going to go into a safe vault that I have overseas. And that may be the last gold that I ever get. I don't know if I'm going to be able to find any more. If you're contemplating whether to buy gold and silver, I'd do it now. The data is goofy and stuff doesn't add up. We're going to continue to cover that. I'm spending a lot of time on this video because I want you guys to know what's going on. I've got an uneasy feeling leading up to December. I have a really uneasy feeling with what's going on under the surface in gold and silver. And we're going to figure it out. We got some smart people working on this problem. I'm going to interview one tomorrow. We're going to look at some shadow contracts going on in the COMEX that aren't being reported in the data. Just goofy stuff. I'm telling you, something's happened. I get the feeling the physical's not there. I get the feeling they're lying in the data. We're starting to see the data not add up. I'm a former auditor. I look at this and I'm like, somebody's lying. Show me the transactional data. If I'm an auditor and I see these tables and they don't add up, show me the transactions so I can tick and tie it. I can go to each transaction, I can add it up, and I can say, okay, this matches your table over here. But COMEX doesn't report transactional data. So something's going on there. We're going to continue to cover it. I'll continue to bring you more on the BS that's going on COMEX. So stay tuned for that. Until next time, it's Robert at goldsilverpros.com.